Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. Have investors discarded the common sense indicator in recent months? Joining me to discuss is Abraham Thomas, Chief Data Officer at Quandl. Abraham, it's great to see you. Welcome back to Trade Talks.
Thank you, Jill. It's a pleasure to be here.
For the last 3 months, stocks with low quality earnings have outperformed those with high quality earnings. How do you measure earnings quality?
Well, essentially, earnings quality is an indicator of the consistency of future corporate earnings. Some companies have regular, consistent, predictable cash flows, and those are generally reflective of high quality businesses where you have a strong moat, loyal customers, a strong brand. Um, Other companies have earnings that fluctuate wildly from month to month and quarter to quarter. And sometimes that can reflect an unpredictable business model where sales go up and down or costs go up and down. And sometimes it can reflect one-off events such as asset sales or a restatement of earnings or change in accounting methodology, all of which will affect earnings, but they're not really reflective of the true quality of the company. And they're not, and obviously they're not repeatable. So generally speaking, investors tend to prefer companies that have high quality businesses with very predictable, consistent, solid, and defensible earnings and cash flows. And that's been the case for the last 20 years, but it has not been the case for the last 3 months. And that's very interesting too.
Yeah, no, it certainly has. So obviously the question is what's changed and what's behind the change?
That is indeed a very good question. There's a few theories out there, and one could well be that it's the effect of central bank and government intervention. So, of course, the Fed has been supporting markets in many ways through various programs of purchasing corporate bonds, purchasing equities. And in that kind of situation, in some sense, the performance of individual companies matters less than the central bank balance sheet. Another possibility is simply the changing composition of the market. In the last few months, we've seen a lot of, especially retail investors, enter the market, and perhaps they are, on the margin, less likely to carry out detailed forensic analysis of accounting statements than, say, a sophisticated investor. And so, if you're not doing that kind of detailed forensic analysis, perhaps you're not paying attention to things like earnings quality or these other second order effects. And then the third part is simply a rising tide lifts all boats. I think that we've I think had the strongest August for stocks in years, perhaps in all of history. And companies are, the large cap stocks especially, are doing amazingly well. And in that situation, every stock is benefiting, is being pulled up by just the momentum of the entire market.
Yeah, it's really interesting, the retail trade that has come in and really over the past 6 months, they've really enjoyed a market that's been going from the bottom left of the chart all the way to the top, a couple of pockets of volatility, but certainly there's been great returns in certain sectors of the market. So the question is, can it last from the retail trade point of view? And then from a data point of view, what does this EQ analysis signal?
Right. Well, to the extent that some of these are very macro currents, such as the inflow of retail money or the effect of central bank intervention, I think earnings quality might be a very good canary in the coal mine. Because if and when you start seeing the traditional relationship reestablish itself, by which I mean high quality stocks begin to outperform low quality stocks again, that really means that those currents that are affecting everything are changing. And so it might be a precursor of a change in direction for the entire market. So that is certainly something to watch out for if you're an investor, that that earnings quality the extent to which earnings quality becomes a factor or returns to being a factor might actually be a precursor to a downturn in the market as a whole.
All right, Abraham, great to see you. Thanks for joining us on Trade Talks.
Thank you again, Jill. It's always a pleasure to be here. Bye.
And thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.